Good morning. Before we carry on, could I ask you one small favour? Could you please subscribe to my channel? Thank you. Good morning. Today we're looking at CIVITAS Social Housing PLC. This is a REIT, which is a real estate investment trust, where by law they've got to pay 95% of their rental income in the form of dividends. So we're looking at this from a point of view of earning revenue and looking for a good secure share to invest in, and I think I found it in CIVITAS Social Housing PLC REIT. I'll tell you a bit about the company. This is an article from the Telegraph newspaper, and it says here, this will explain what the company does. It says, this investment trust owns social housing and care homes which it leases to local councils and care providers. The trust income comes from rent, and it also benefits from the increase in value of the properties it owns. The managers focus on providing the well-being of its tenants and providing good quality housing in under-resourced areas. So this REIT or social housing provides housing for people who need to live independently but may have injuries or mental health problems. The good thing about this REIT is the rents are indirectly paid by the government, so it's nice and secure. I'll give you a bit of financial information on this REIT. It's CIVITAS Social Housing REIT. It's a dividend paying share. The current price is £117 and 117.44 pence. The dividend yield is 4.64%. The price to book ratio, which is used to see if the company is of good value, is 1.09. Anything below 3 indicates that the company is reasonably valued. The dividends are paid 4 times a year: January, June, September and November. The last dividend was announced on the 11th of May. Today is the 15th, and the ex-dividend date is the 20th of May. This means this is the last date you must own the shares by to benefit from this dividend payment. Any shares purchased after that will not be eligible for this particular dividend payment. The dividend payment is 1.35 pence per share. This is a very ethical fund. You are actually investing in a housing association which provides housing for people who need a certain amount of care, and it's a long-term venture. Most of the tenants are 25, so this is an example. A lot of the tenants are about 25 years old and aiming to live at least 50 years, so they'll be in these houses for 50 years, so that's 50 years worth of rent. And the houses are designed to enable them to live as independently as possible. So it's a very ethical fund, and the rent is indirectly paid by the UK government. I'm going to buy £500 worth of shares, which equates to about 424 shares at £1.35. No, sorry, I'm going to buy 424 shares. Now the dividend payment is 1.35 pence, which will be payable in about June of this year. So that equates to £5.72. So within a couple of months I'll be getting a dividend payment of £5.72 as a reward for my investment, and also there's potential for the value of the shares to go up. So looking at my Trading 212 platform, CIVITAS Social Housing, this is the graph of how the price of the shares varied. That's up and down, but that's only over a very small amount of money, 116 pence to 117 pence. Over 1 week, the price has gone from 115 to 117. So as I say, there is a bit of movement on the shares, but it's only mere pennies. The market's closed at the moment. The shares are traded on the London Stock Exchange. I did earlier on this morning place a buy order of £500 at market value. So when the shares open, when the stock market open on Monday, the shares will be bought at the market price, which I anticipate to be more or less the price they are now, which is 117.44 pence. Then I'll have £500 worth of shares, which equates to just over 424 shares in this company, and I'll have the benefit of potential growth in value of share, and I will have a nice dividend payment 4 times a year. Hope you found this video interesting. Until next time, I really do bid you a really successful investing adventure. Till next time, goodbye.